FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's 12/11/19. Well, things are deteriorating at a pretty rapid rate north of the border. I know most of you, there's a big white country, snowy country to the north of the United States. Can't remember the parallel, 46th, 19th, whatever. It was decided in the War of 1812, and they're having a very cold winter and an unhappy Christmas. Bankruptcies are increasing at a rapid rate, which is always great for the bankruptcy bar. They're the ones that make money when the economy is going down the tubes for sure. Corporate bankruptcies probably won't be far in the offing. Well, our Canadian expert here, Danielle Park, is with us. Danielle, so you got a growing cannabis industry, no pun intended. Is that going to bail out the country here? According to your leadership, it's a real boom for things.
Listen, we will take all the diversification we can get. We are in sore need of structural reform up here in terms of our economy. So I'm not going to poo-poo the budding cannabis industry, but in terms of pulling the weight for the whole country, I'm afraid we're not quite there yet. Still, so. You know, we've got a lot of problems up here at the minute.
Yeah, you know me for a while, and I'm always skeptical of new, like you, I think, skeptical of new investment trends. I always talk to my oldest, dearest friend. I don't want to mention his name when I want to find out the greatest, latest way to lose money. And he got into Bitcoin right when Bitcoin was 12,000, and when it went to 19, I just begged him, please sell half your Bitcoin. Just get rid of it, please. Oh, no, it's going to infinity. And then I should have known. I hadn't talked to him. We don't usually talk about money. We're too good friends for that. But he's crying to me about his cannabis stocks. And I said, Don't you ever listen to my show? Do you ever listen to the Financial Survival Network? I told you the stuff grows. It might not grow on trees, but it grows on vines or whatever it is, stalks. It's like corn, it's just unlimited potential supply and hype masters. I mean, you've covered this in depth, Danielle, but people hyping these new divisions of the economy. It's just like the dot-coms in the United States in the early 2000s, late 1990s. I got burned there. I like to think I was a little smarter since then, but you always have this. And then combine that with that we're late in the cycle, and this whole ball of wax, this whole house of cards could just come crashing down at any moment.
Well, our problem is still that we enjoyed the commodities boom from 2001 into 2008. We had a bust in 2008-9, but then we had a quick reflation again with the QEs and the debt coming into the system rapidly, and people thinking that they were overly optimistic in terms of demand curves, and they expected a quick reflation in global demand and growth. And so there was a sort of a concentrated investment back in the Canadian commodity sector, energy, the oil patch, but also many other kinds of commodities that we produce. And so what happened was, because growth didn't rebound the way it was expected, we ended up with a massive over inventory in most goods. And that demand really never came back. And so we've had a downturn in business investment in this country, which has been a very serious. Canadian business investment in plant and equipment is down actually 20% over the last 5 years, Kerry. And our GDP per capita is 3% lower today than it was in 2014, just as the oil bust was kind of renewing. And of course, it has led to a recessionary state in Alberta, which is our largest oil producing region, but it's also a large part of Canadian GDP still. And so that's why we've been very muted. And while you guys have had a weak recovery in America, we've had a much weaker recovery than you in the past 5 and 10 years. And it's evident because how they tried to reflate things then when they didn't have, we should have diversified our economy over the boom run as it was, never waste a good boom, right? Always be stocking money away and reinvesting and diversifying income streams. But instead we took that low hanging fruit, baby, and we ate it all.
Yeah.
And so a lot of dumb things were done, and including, a lot of spending on consumer goods that were that were depreciating, lots of cars, lots of houses, which is normally, it would be a good thing. But as you discovered in the 2006 top in your housing market, when people buy housing with, indiscriminate concern for price and things like price to income ratios, and also just on a speculative flair, which has been very dominant in our economy and through our housing markets in the last decade. And so we really haven't had any significant growth in wages. We haven't had any significant growth in, as I say, new business sectors that can really take over and help yet. We've got some nascent things, certainly. We've got lots of areas and ideas that we could invest in. But really, the other aspect of this is how we kind of got through since the bust of the oil patch again in 2014. The last 5 years has been almost entirely about consumer credit, corporate credit, which was primarily used for buying back their own shares in the large companies, and doubling down on housing speculation. So today we have this horrendous state of affairs where we've got corporate debt to GDP, non-financial corporate debt to GDP is now 71%, Carrie. And relative to you guys, you're 48%. You're just under 50% right now. We're 71. Canadian corporate debt to GDP in the peak in 2000, as an example, was 57%. And that was an over-levered business sector at that point as well. And it was 55% in 2009. Well, we're, another 11% above that right now. And the big six Canadian banks are kind of the monopolies up here in terms of corporate and consumer lending. So they're now starting, finally, we're starting to see their latest quarterly earnings, the fourth quarter results they released last week, where they were starting to take much larger reserves for debt, bad debt. And that's been a long time coming because we could see all these pressures building. We could see the insolvency stats leaping. And yet the big banks were still moving their earnings around to keep surprising to the upside. Well, that ended last week with the fourth quarter. And yet, the big banks have accounted for 60% of our stock market's gains as well in the last 5 years. So you can see how this is all related, right? Whatever gains have happened in the stock market, and believe me, there hasn't been much. You know how everyone's talking about in the last year how great this rebound has been since Christmas Eve, and for sure it's been, double digit for sure. But let's not lose track of the fact that it was after a massive sell-off in the last part of 2018, as you well know. And so if we look at the Canadian stock market, as I say, driven by the big six banks who were driven by this excessive leveraging of corporate and household balance sheets in the past 5 years, we've got the TSX today is up 3% since January of 2018. And only 8% over the last 5 years. So obviously your U.S. market has done significantly better than us on your QE injections, but we've just got, not great fundamentals anywhere you look at the moment, and yet we've got these very overvalued asset markets. So you got lots of leverage, lots of risk, not lots of growth, and declining cash flows. That's a bad recipe.
Yeah, and eventually we know that you have to pay the piper when this happens. Eventually, the market is going to adjust and prices are going to adjust. So it's just a question of when. And hey, one of the reasons we spend time with you speaking about Canada is that over 15% of our audience of the FSN community is in Canada, believe it or not. And sometimes that number goes as high as 20, 30%. Plus, it's kind of like, look at it this way, kind of like subprime housing or high-end housing. In the U.S., when one part of the housing market screws up, all of it does. And my feeling here is that even though this damage is limited to Canada right now, it could very well be a portent of things to come in the United States. You know, some of your numbers look worse. Some of them aren't quite as bad. Obviously, countries got 10 times the number of people, but exports are down. We've got industrial production down. Industrial jobs are down. All of these things are happening in the United States, too. It's perhaps a bit more pronounced north of the border.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Absolutely. So you've got the same, fundamental factors being the over-leveraging of households and corporations, the easy money era that drove everybody to reach for yield and take on, not apples to apples risk in trying to get higher income. They've bought all these sketchy securities at very high valuations. So whatever savings there are is now in those and also in housing, which is, as we said, very highly valued. So you've got the risk of everything kind of deflating at once here. And, that's why I think it's important to recognize, like, we did have a bad jobs report last week. We lost 70,000 jobs or so in Canada in November, which many people were surprised. But I wasn't surprised because if you look at the trend, so it's like what our friends at Hoyes Miklos, who are trustees and insolvencies and trustees and bankruptcy, insolvency experts, they have been saying, look, here's the data. It's been leaping in Ontario and BC in particular, and Alberta. Of course, Alberta's in, the recession in their economy. Ontario and BC are technically not, but we're also seeing a lot of, pressure because housing has got so expensive, completely unaffordable for the average household. Food has leaped something like 5% in the last year. And even before interest rates move higher, people are defaulting. So that really tells you this isn't about higher rates now. This is not about, first of all, there's not a lot of room to cut, but even if they cut rates, it's really not going to sort this out. What needs to happen here is debt needs to be written off because it's just been to the point where people have been paying credit with credit now already for the past couple of years, sort of just, pretend and extend. And that, of course, is a very, finite strategy. You can't continue that forever. And then what happens with the companies is because they've been also wasting their cash, not investing in things that will improve productivity to a large degree, but rather using financial gimmicks like buying back shares. So they've blown through a ton of cash, just as revenues have been flat now for several years. And as cash flow doesn't pick up, they've now got this, like I said, record amount of debt to service. Even if rates don't go up, even if rates move lower, they're having a hard time finding any excess cash flow here. So what they do is, they can't just get rid of their debt. So they have to look to where do we cut costs. And that's what they're starting to do in the workforce. And of course, as I say, the insolvencies, as Doug Hoyes was writing in his report this week about, his wording was that if we see a recession, and we certainly have to think that we will at some point here on a national basis, just our normal recession, or just if housing prices don't rise any further or start to go the other way again, you're going to see a whole bunch of people that are supposedly the better off Canadians, the ones who own assets, having to, sell things, fire sale prices to try and pay down debt. And he says, the downpour will become a deluge in that environment. He's already seeing a downpour, and that's with still relatively very high employment and very low interest rates.
Yeah, it's looking a bit bleak there, but So one thing, certainly our neighbors to the north are better educated as a rule than Americans. Traditionally, that's been the case. I just remember going through customs one time into Canada, and the guy asked what I did, and I said the name of my company. He said, "Oh, you're a lawyer," and like no American customs guy would have ever been able to figure that out. He would have just rolled his eyes.
My Latin professor at University of Toronto actually worked on the border as a border guard.
Well, there you have it.
Part-time, and he had a PhD, of course, and he was just waiting for his professorship to be to get finalized on a full-time scale. So he worked part-time on the border. Yeah. So yeah, we got a lot of education, generally speaking. A lot of nice folks, but we need some new business ideas other than add, debt, and stir. We need, not just the oil patch. We need to retrain and rework businesses for the future. And there's a lot of things we can do. There's a lot of growth areas, and there's a lot of companies. For example, here's just one, but there's how drones are becoming a major focus of the future in terms of efficient and electric delivering of goods, as well as things like electric drone ambulances. But there's one that a Canadian company that's now has developed, and it is a drone that plants trees, Carrie. So plants them 10 times faster than humans.
Really
and
cool.
The point is that, as you know, deforestation has been mechanized for a long time, and is extraordinarily effective at fast and complete eradication of forests, but we've still been largely planting with a shovel in hand. So they've come up with some ways to mechanize and to, help with the reforestation. So there's a lot, we have a wonderful natural environment tradition up here, but it has really been damaged to a large degree with some of our operations and focus in the economy. So we have a lot of rebuilding. Recyclable products or reusable products, new materials that are biodegradable. There's a lot of Canadian companies that are already developing stuff like that. But it's a function of how do we, again, with the economy being so distorted and unequally weighted on a couple of sectors in the last couple of decades in particular, we really have to get very busy here.
Yeah, and it's really bad for a sophisticated economy like Canada to be overweighted on, I guess, resources and export orientation. That's really dangerous, because I learned in elementary school, they used to call them one-crop economies. Got to forgive that. That's the printer going crazy. So they called it a one-crop economy, and like Brazil being dependent upon coffee, or Saudi Arabia on oil. And even something like oil, which it appears the oil industry, or it appeared until recently, the oil industry was secure for permanently. It's still dangerous. Jamaica had tourism and bauxite. And you'd go down, the list of countries, and there just wasn't really good diversification there. And you could do that in the States and the U.S. and Florida. We just seem to be building stuff. That's about all we do here. Although we've got the tourism industry and education, and that's kind of it. So diversification, really, really important. And what happens in Canada is important to the U.S., although it isn't immediately obvious to everyone. And that's why the relationship's so important. And I love hanging out in Canada. People are nice. Food is good. And besides that, though, important member of the world economy. So, Danielle, when we have this conversation next year, where do you think Canada is going to be?
Well, I think the Bank of Canada is going to start cutting rates in 2020. Now, they don't have much to work with. They've been on hold now for the last 9 meetings because they've been sort of hoping that they wouldn't have to cut lower. They're in this catch-22 with this crazy household sector that keeps piling into more debt every time rates go lower. And we saw that even recently as mortgage rates went lower with international bond markets rallying. So the Canadian mortgages went down, and all of a sudden mortgage debt spiked again. So I think we can't fix this quickly. We're going to have rising defaults, rising write-offs. It's going to be a hard go for the banks. We're going to have rising unemployment for a while. It's going to be hard for households. I think, we hope the U.S. holds up better because 75% of our Canadian exports are sold to you. But, when we've got our CMHC CEO, which is like your Fannie Freddie, saying recently we have to call out this glorification of home ownership in Canada, just this whole obsession with everyone needs to have a house regardless of cost, regardless of whether there's any money left over for anything else. We really do have to rethink our models. And we've got a bunch of millennials up here like you do who basically, don't have credit cards, aren't buying houses at all with the same fervor or ability that the generation before them was. So we've got a lot of supply of expensive stuff and not a lot of people able to buy it. So I think we're going to go through a rough patch for sure. And, the other thing is it's all connected because the banks have been the bulk of whatever gains we've seen in the stock market, as I mentioned, and because GIC refugees or savings deposit people or guaranteed instrument people have all moved into bank shares in the last decade in order to try and get some more income, whatever savings they have is at risk, at the same time that the housing market and the job market are at risk. So we don't have a lot of pockets of strength here other than new up and coming business ideas, companies that have cash and haven't blown their brains out on cheap debt and actually can take advantage of fire sales and other competitors as they weaken to add to their business plan. And the same goes for, those who can pay down debt now or not have debt and can build up cash now. I think we're going to come into a really amazing, laundry sale time when everything will be written down, and there'll be enormous opportunity in that. And I would say that's likely within the next year or two that we're going to get a lot of work to the downside on that. And that will, bring a lot of opportunity, but it's going to be painful for those that aren't prepared for it.
Oh, for sure. Hey, and we didn't even talk about the deteriorating economic situation in China, which is going to have a further impact on Canada. I mean, in the U.S., the imports were down, I don't remember, it was 15% or 23% year over year. That's a huge number. I assume that Canadian exports probably down as well to China. From some other disputes as well as from the weakening Chinese economy. Hey, we've got Hong Kong going on. Now that's a plus for Canada because that will result in flight capital coming to the country. But we could see a situation where Chinese people have to liquidate their foreign overseas real estate holdings to stay solvent in China. And if that happens, we could see a real blowout.
China's corporate debt problem makes Canada look like we're prudent. It's off the charts obscene, the amount of leverage in that banking system. And indeed, showing up in the same rising insolvencies, bankruptcies, defaults, just the same sort of evidence of it, only much worse there.
Yeah. All these things, well, it's going to be fun to watch for sure. And we might very well see literally some fire sales, and fire sales are great if you're on the buying end, that's for sure. Anyway, we will catch up with you in a couple of weeks, Danielle. Check out jugglingdynamite.com. That's Danielle's site where you're going to find a lot of these articles. And check us out, financialsurvivalnetwork.com. Email us, kl@kerrylutz.com with any questions or comments. Danielle, always a pleasure. Talk to you soon.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.